Hey guys, Daniel here and welcome back to another video. Here today, I want to update you all on Voyager Digital and their new news release pertaining to new warrants. I know a lot of people in the comments section on my YouTube videos, in the Discord server, have seen this news report and, we're a little bit confused as the language is a little bit concise and complicated. So what I did, I took this information, I took some background research that I did on the initial creation of these warrants, and I put them all into a bit of a flowchart to make this kind of a very seamless way to communicate this information to you guys, as this information is very difficult to understand straight from the text, but I hope to make it a little bit more comprehensible by making the flowchart. So if you enjoy these type of videos, guys, make sure to hit that like button, and yeah, let's get into it. When we look at this whole situation, and we got to go back to December 15th of 2020 when Voyager raised right around 8 million Canadian dollars. Now, the way they raised this money is by issuing what's called special warrants. And they issued around 6 million special warrants at that time. And they sold each of those warrants at $1.50 Canadian each. So this is the first thing we have to touch on. When you do the simple math, $1.50 times 6 million should be $9 million. And here we have Voyager only collecting around $8 million. So why is that? You got to understand that when a company, wants to essentially raise capital, they have to do it through a larger firm. And those firms sometimes charge higher fees to smaller companies. And that's pretty much what happened here with Voyager, that the firm charged them over 10% commission, or, they charged a 10% fee for facilitating this whole issuance of these warrants, essentially. And that is why we have Voyager collecting $8 million instead of the $9 million. Now, when we look at what makes up a special warrant, we'll see that the big part of it is a single share of Voyager. So at the time of issuance, Voyager was trading at around $2, $2.50 per share in the Canadian market, and then it also consists of half of a warrant. Now, this warrant has an exercise price of right around $2.50 per share with an expiration of December 15th, 2022. Now, if you don't know what a warrant is, it's essentially the right to buy a share at a certain price by a certain date. So by essentially owning this warrant here, you have essentially the ability to buy Voyager at $2.50 per share on December 15th of 2022. So you're essentially paying December 2020 prices for Voyager in December of 2022. So you have that 2-year gap. Now, this is what essentially the special warrant consists of. And one thing to note with this special warrant is that it is non-tradable, at least up until today. This warrant has been sitting in the accounts of the people that bought it. And now what's happening now in this whole kind of news release that was released today is essentially these special warrants getting exchanged into units of company. Now, the only difference between the two is the fact that the unit of company allows you to actually trade this, essentially your stock and your individual warrant. This is very big, guys, because essentially you have diluted shares that are just kind of sitting there and not having an impact on the overall market. And now this is big because now we have literally 6 million shares coming out into the public markets ready to be traded. Now, for some reason, I couldn't really identify the exact reason. They're actually making, one special warrant, and they're giving you 1.1 units of company, which essentially equates to actually 1.1 shares and 0.55 warrants, which is 10% higher than originally expected. Now, I was not able to pinpoint the exact reasoning behind Voyager giving extra shares and extra warrants, but from my understanding, it has something to do with a 90-day period. If you have more info on that, let me know down in the comments section. I would greatly appreciate any insight on that. But it's important to understand that essentially every one special warrant is now actually being converted to 1.1 shares instead of the original 1 share, and 0.55 warrants instead of the original 0.5 warrants. So, when we put these together, this is essentially 1.65 shares diluted. multiply that by the 6 special warrants, and you have, right around 10 million new tradable shares. Now, that's a rough number. We do have the warrants. You have to keep that in mind because the warrants won't dilute the stock until December of 2022, and that makes up right around 33% of this number here with the 9.9 million. But needless to say, guys, when the market opens up on Monday, we're going to have right around 6 to 7 million new shares that are unlocked and ready to be traded. So this is important to know as it does create dilution, although not really, wanted potentially from the Voyager, from Voyager rather itself. Voyager as a company has right around $200 million sitting in the bank as of right now, and they don't need any further capital. But because of this lockup expiration and things along those lines, these shares are just coming out now from the dilution that occurred back in December. One more point that I want to add on here is, the potential for a bit of a downtrend on Monday based on these new shares. Voyager has been downtrending pretty hard since about the beginning of April, going from around $30 per share all the way down to, the low 20s. And you really think to yourself, how much of this actually potentially priced in these issuance of shares? Because it isn't like this event was unexpected. We knew that 4 months from the issuance of these warrants, we'd get dilution. So when you think about it, is this event priced in? I'm assuming most likely yes. So on Monday, it would not surprise me to see Voyager potentially positive if the vibe around cryptocurrencies is positive. And, even if it is potentially down, I don't think this event moves the needle that much in the short term for Voyager based on the fact that this was actually a very predictable event. So this is important to know, guys. When we, think about Voyager as a company going forwards, this does not affect them in a major way. When I look at my price targets for this stock, it's important to know that, from what I understand, Steve Ehrlich says there's right around 170 million shares outstanding, fully diluted. So I'm not 100% sure if he includes these shares in that count. I'm assuming he does, but even if he doesn't, an increase of 5 to 6 million shares is only a couple of percentage points. And when we're talking about, potential huge upside with Voyager here as a company, that won't really move the needle. Now, looking forwards, I don't think dilution is that big of a problem, as again, Voyager, their margins are extremely high, comparable to a company like Coinbase. They have $200 million sitting in the bank. Their business is very low maintenance, and I really think they won't need to raise any further capital going forwards. So yeah, that's what I'm thinking about Voyager, guys. Let me know about this, what you think about this whole situation down in the comment section down below. We'll see what happens next week, but this situation is a little bit foggy. I think they could have done a much better job of explaining this in proper English. I'm not gonna, say it that way, but there are a lot of people out there that couldn't really understand this news report, and I think it could have been worded a little bit better. So anyways, guys, thank you so much for watching. I really appreciate you being here. See you next time.